New Zealand is quite safe, you know. In fact,
Yeah, we were like for 101 days there wasn't any case, but it all of a sudden because people were pretty easygoing, and then
uh-huh.
taken out back all of a sudden.
One of my
Okay.
cousins is there. So she also told me the same. What you're saying.
We're very carefree, like as if we are in a safe heaven, nothing is going to happen to us.
Our
कोऑर्डिनेटरला
But
लिंक
site
पाठवायची का?
is very safe there.
But one thing should I tell you, Mr. Sagar,
yes, sir.
you have done such a right decision to go to New Zealand and live there.
I wasn't expecting it to that it would turn out to be such a good decision, but
No one
yes.
was expecting. It was a great news. And you know, Mr. Sagar is not here. He is already. First, we thought that you are in Dubai,
Yeah,
right? You from here you went to Dubai, and from there
yeah.
you have shifted. Okay.
But through Facebook, we come to know people. And the social media is good.
Yeah, it's pretty good. Yeah, to connect.
Uh, Milind ji, can you please contact Dr. Dheeraj Jain? Shreya ma'am, are you here?
Yes, sir, I am there.
Yeah, Dheeraj sir is there. So,
Yes.
Mr. Sagar, we have Dr. Dheeraj Jain, who is an associate professor for finance. We have Dr. Shreya Virani, who is also
लाइव्स
faculty for finance. So, they both of you are here. And students are pouring here, you know, where students are pouring. And we can start after some time. A little, I'm just waiting for Dr. Adya Sharma also. But I have to see her schedule also. I think she must be busy.
No worries. Yeah,
तुम्ही
Still
पाहताय
two
का?
minutes left.
तुम्ही
sure.
पाहताय ऑनलाईन?
I'll just get my screen share.
Yes, yes.
Is it visible, sir?
Yeah, yeah.
Yes, it's visible. So, is Dr. Shreya Virani there?
Yes, ma'am. Yes, sir.
Uh, Ma'am, can we start or so? I mean, how, I mean, because ma'am may take time and I don't know, she must be busy in some meeting or so.
Yeah.
So,
What do you say?
yeah, so Mr. Sagar, we,
Yeah,
Dr. Shreya Virani will open the whole session with the opening
yeah,
remarks. And
sure.
if Adya ma'am comes in between, so we would also invite Adya ma'am for to say some few words. If not, then I think you can start with your session. after
Perfect.
she introduces you.
Sure.
Shreya, please go ahead.
Yes, sir. Thank you so much. Good afternoon, everyone. I take this opportunity to welcome you all on behalf of SCMS Pune for today's Finance e-guest lecture, which is on the theme of sustainability, the future of finance and reporting. So today we have Mr. Sagar as speaker for today's sessions. Mr. Sagar is chartered accountant by profession. He is a consultant, trainer and author with over 10 years of training and consulting experience. He has successful track record of providing research-oriented training and advisory services in the areas of IFRS, audit, and compliance services. Mr. Sagar has worked as a founder and then partner in an audit firm for 7 years. He has provided training and consultancy services to clients like Saudi Aramco, Bank of New York, Bank of New York Mellon, Deutsche Bank, Cognizant, Credit Suisse, Genpact, KPMG, and EXA, etc. He has delivered and trained the trainer sessions for many renowned training providers and universities, providing training for ACCA and CMA. Welcome, Mr. Sagar,
Thank
and
you.
may I request you to take a charge of the session and
Sure.
go ahead with the same. Thank you so much. We are
Yeah.
really glad
Thank you,
to
well.
have you in today's session.
Same
Over
here.
to you.
Thanks for the kind words, man. Thank you.
Yes.
Perfect. So, yep. Hello and welcome everyone. Welcome to this wonderful session today. Wonderful not because I'm taking it, wonderful because the topic is really relevant. It's something which should interest everyone, and it's a hot topic globally. Now, the question you should have in your mind is, who am I? Do I know anything about sustainability? How do I, how come I know about sustainability, or how does my day-to-day working revolves around sustainability? So to just give you an insight as to what I'm doing right now currently. So currently I work for Chartered Accountants, Australia and New Zealand. So I work in their CPD team, that is Continuous Professional Development. And my work involves developing training programs, procuring training programs for the CA members who are the members of Chartered Accountants, Australia and New Zealand. So I work for Sydney office, but due to my personal preference, I didn't want to stay in a big city, and that's the reason why I am currently stationed in New Zealand. And this work, I mean, this profile gives me a wonderful and a unique opportunity where I work with one of the best brains in the world. So I kind of interact with professors from renowned universities. I work with partners at Big Fours. I work with the Ministry of Finance people, with the Treasury people, with the government auditors, and wonderful people who are doing kind of research in the sector. And one thing which everyone will tell you who are working in the industry is that sustainability is the future of finance and coding. And I'm very thankful to SCMS for considering this particular topic. I feel there's a need to educate the future generation on these topics because going ahead in 4, 5, 6 years down the line, you'll find the industry will demand more professionals with the expertise in this particular area. And I'm really happy to see the turnaround which we have. The moment someone says sustainability, I mean, that would have been a question in your mind as to, oh, this is another session where someone will come and talk about climate change, will talk about things going in the wrong direction, talk about CO2 emission, about greenhouse gas effect. I mean, we have been learning this from our childhood, per se. But honestly, I'm not going to talk about anything on those lines. I'll be talking about pure business here. I'll be talking about how the businesses are dealing with it, why it's a hot topic, and what are the opportunities that you have in this area, and what are the world governments and international organizations doing in this particular space. Perfect. So let's get started. Now, what do we expect in this session? So I won't be giving a pure theory to you. I've tried and made it more kind of interactive. I've incorporated a lot of research bits from different websites, different places, different facts and figures that gives you an insight as to what is happening around the world in this particular space. Sure, so let's get started. Now, why is there a need for sustainability? But before that, let's understand what exactly is sustainability. The moment someone says sustainability, by default we think we're talking about global warming, we're talking about climate change, but that's a very small area that sustainability covers. Sustainability is about three major factors. One is economy, another is the social factor, and third is the governance factor of the organization. So we are not purely focusing on the environment aspect here. We are focusing on the social and the governance aspect of the companies when we talk about sustainability. But how come all of a sudden everyone's worried about sustainability? Now, last, uh, I mean, this particular year, right from start, right from Jan, if you recall the news which you have been exposed to by different media, by social platforms, social media platforms, you'll find that it's all negative. We see that COVID-19 pandemic is hitting everyone. Then we talk about the racial discrimination that's happening around, economic aspect, environment not doing good. There were bushfires in Australia. We spoke about hurricanes happening in US. So everything is going haywire. Everything is out of control, and we have a major role to play. Now the question comes, how can an accountant or a finance person do anything to save the world? I'm not a superman. I'm not a superhero. I'm not an economist. Sorry, I'm not an ecologist or environment expert. How am I going to save the world? Believe me, everything revolves around money. And the moment money is being channeled in a proper manner, you can and we will definitely save this world from going in a wrong direction. And that's the basis of this entire session, which I'm going to deliver today. Right. So these are the kind of news clippings which I have included here just to give you an impact of what is, why there is a need of sustainability, what is happening in the current environment. So the moment you tell a businessman, oh, there is a serious issue, they might say, okay, I don't care about it. If you tell them, oh, your board of directors, we don't see it to be diversified, that's we don't care about it. But what happens the moment people stop dealing with the organization saying you are doing discrimination? That's where the companies start taking it seriously. And this situation is highlighted here in this news for CrossFit. The CEO casually tweeted something which was racist in itself, and and immediately people start doing going ahead and taking back their memberships. Their commercial partners started moving away from them, and this is the impact which we see now of the social and governance factors. Another implication is here in terms of the economic loss from bushfires. So 4.4 billion is not a small amount, and this is just expectation. Imagine the impact on tourism. Imagine the impact on the people who survive on it. So the unemployment rate increases with a particular event happening because of climate change. Another news here is from Malaysia. Top glove labor issues. So US says we won't be buying gloves from you. Why? Because you have labor issues. In Australia, UK, we have seen a law coming into picture called modern day slavery, and all the companies need to report that whatever is their supply chain, from wherever they buy their raw material, wherever they have outsourced their manufacturing, child labor is not involved. There is no bonded labor, equitable and justified payments are being made even to the subcontractors, laborers. Now, that's something really relevant. Now, we see news coming up, for example, in this case, the company might have suffered a loss not following the proper decorum, not giving importance to social factors. Flood issues are pretty common in India now. We saw flood hitting the northeastern states, West Bengal as well. And it's not only about the implication on people right now, but look at the long-term implication. The fertile soil is gone, crops lost, people unemployed, government spending on that particular taking have to spend in terms of ensuring that the people are being taken care of, and that money could have been used somewhere else, but that's gone now. And on top of that, we lost an opportunity of earning something. A GDP contribution would have come from there, but then things are going haywire. Now, considering all this, definitely there is a need for sustainability, and we all agree with this. But why all this happened? And there's a unique story, and not a unique story, I'll say, everyone would be aware of it. And the story goes this way: a man gets a hen, I'll just cut it short. That hen lays golden egg. It's pretty happy taking one egg every day. The hen is laying golden egg every day, taking the egg, selling it, making money. But then because of greed, person says, or his whatever, the family decides that let's cut that hen and take out all the eggs at once. And if you do that, that's what happens in the story. Finally, the person realizes how foolish he is. He has now killed the steady source of income, right? And this is what we have done in terms of agree to make profit. Now, as an investor, I was just looking at profitability. I never cared about the environment implication. So what happened is the company started just focusing on profitability, generating more pollution, consuming more raw material, more than what is required, caring less about the implications on society, and that eventually is backfiring now and impacting their own businesses. And the story lays the foundation of sustainability. So what companies have been doing over a period of time is we never cared about the social environment factors much because no one was worried about it. Investors said, we don't worry, we need the money. People in general said, we are getting cheap goods, we are happy with that. But then eventually we see a trend where people have realized this cannot continue for long term. I mean, imagine you have a small food processing center near a river. You take fishes, right? You process them and you sell. Now, what you did was you started consuming more and more and more of fishes. You started releasing more pollutant in this area. Automatically, the water got polluted. The number of fishes dwindled. The raw material supply dwindled. And the factory closes down. So in this greed, we never thought what are the long-term implications. There was a short-term view being taken, and that's what has created this entire problem around sustainability. And something to be blamed around is the faulty or flawed economic model. Now, the global economies and the countries thought that, oh, we should increase our GDP. Let's think about increasing employment. Let's think about the growth. And that's we were so blind thinking about those growth that we never gave importance to the ecological factors. Now, you might feel that economists are thinking about it right now, but that's not correct. Early 90s and in 1970s specifically, we had Herman Daly who came up with this whole theory, which is again a repetition of something which was said before by eminent economists, that we should think about ecology, we should think about something called a steady state of economy. That is, you shouldn't just look for more and more of production. You should see how much production you can do within a parameter that your ecological balance is not broken. But then we never did anything on this count. We were just blind and producing more and more and more. And what we did was, which I've highlighted here as a root cause issue, is we took valuable inputs without even measuring the value, right? Imagine I'm a mining organization. I just get more and more of raw material. In my profit and loss, what sits in is an extraction cost, my labor cost, but I don't attach much of value in terms of what I'm consuming, right? And this can be an implication. I'd never attach a value as to how much damage I'm creating to the ecology, to the economic system. And this created the whole mess which we are seeing now. Now, economies cannot be blamed for it. There are various factors. I won't go into the economic, the business factors, the political factors of it, but then this sets the tone for our session, right? Now, need for sustainability, as we all know, a lot of employment generation depends on natural world. I've got some figures for you, so it makes sense for us. But then just to cut it short and then just focus on the major components of it. If you don't worry about sustainability now, in future, there are going to be long-term implications. Imagine what happens if there's a huge unemployment in an economy. People would be willing to do anything to get their food to satisfy the basic needs. Crime goes up. Crime goes up. What happens? Normal life is like, I mean, jeopardizes. Like, we will not be able to have a normal life. It will be difficult to get on the roads. It will be difficult to enjoy your life. So it's just like connecting one dot to another. So if we don't care about ecology or about the economic or the environment system, it is going to have long-term implications. Now the figures suggest us that millions of jobs would be lost over a period of 50, 20 years, or 20, 50 years, if at all, we don't do anything right now. By 2050, the damages are expected to amount around $8 trillion. That's a massive figure. And the reason I'm putting figures because I'm speaking to accountants, future accountants, and speaking to future finance experts. And we need to know the figures, right? And if I don't tell figures, you will not take it seriously, right? And that's what is happening now. We are focusing on figures to explain the industry. This is serious. This is going to backfire on you, and this means losses for you, or even impact the long-term sustenance. If the planet continues to warm, we see the global warming happening, Canada will lose around 13% of its income, which is massive. The Cambridge research sees Indian GDP to potentially shrink by 10% due to climate events. Now, what do you feel we should do? Should we sit back and relax and enjoy and say, okay, we don't care about it. It's just something that's happening around. We don't care about environment. I'm not a bird. I'm not an animal. I'm a man. I'll enjoy my life. I'm a human being. I'll enjoy my life. But that's not going to happen. It's going to eventually backfire on us, and we need to be serious. Unfortunately enough, the government became serious, right? And I'll just jump to the next slide, and then I'll come back to this one. So it's better late than never. Now, something very unique happened in year 2015. We had around 194 countries coming together and signing an accord in Paris called Paris Agreement. And what they decided, or what is the major outcome of that agreement is like, we want to keep the global warming, the temperature increase, in the range max 2% above what it was, the average temperature was before pre-industrial level, and try to restrict it at least, at best possible scenario, to 1.5%. And you know where we stand now? We are 1% above that average. Even with 1%, we see things going haywire. With 2%, things can be really worse. But why do you think they kept it 2%? They kept it 2 degree? Because if they move beyond 2 degree, it's going to be even worse. But keeping it below 1% is not practicable. So that's the kind of mean which they agree, right? But then what happens? Only agreeing on 2% is not enough. Then every country went back and came up with certain measures to see how they can control this global environment, control the rise in the global temperature. And while doing that research, or while putting across, while putting their brains, while doing brainstorming, they realized that until and unless we tighten the screw on reporting, until unless we tighten the screw on finance, this is not going to be achieved. Because a major pollution contributors are industries. We need to control them somehow. Imagine I come to you and say, I will not give you a loan because you are generating a lot of pollution. Only if you put in solar panels, only if you generate wind energy and consume it, only if you have a water treatment plant, only then I'll give you a loan. What will you do? You say, oh, I need money. I have to do this. Otherwise, I cannot survive in business. What if the investors say, we are going to evaluate you. We are going to see how you're performing on environment, social, and governance factor. Then you'll take care of it. And that's where these two things merge. We say to achieve these parameters, government has to come up with stringent measures, which they actually did. And the major focus was on industry and how to regulate industry, how to curb the emissions at the industry level, how to ensure that they stay well within the limits, was to tighten the screw on two aspects. One is when I give them funds. So just imagine, I tell the company, I'll give you money, but then you need to control your emissions. They'll say, okay. But someone need to check whether they have actually controlled that emissions. And that's where the reporting comes in. So we are saying only giving me profit and loss, balance sheet, notes to accounts as per IFRS or as per your accounting standards is not enough. I need more information on environment, social, and governance factors to see are you actually doing what you have committed. And that's why this is where we say sustainability is going to be the future. Another factor that adds to it is the Sustainable Development Goals, which UN released, which I'll definitely be showing to you on the next slide. And all the countries on the world have unanimously agreed that these 17 goals is what we want to achieve as a part of our objective in order to ensure that the social governance and development is being taken care of. We just don't want to develop on GDP front. We want to see there is a holistic development. Now, if at all you want to do additional reading, just search about something called as, I mean, you might have done it, I'm not sure what's in the curriculum, but then it's a very good concept called donor economics, and please read about it. I've not incorporated because I'm not an expert in that field. I've just done a crisp read, but that's a good thing to read. And then what happened? Eventually, as an impact of Paris Agreement and SDGs, government woke up and said, yes, we need to do something. And that's where the whole exercise of sustainability and reporting and finance started gaining more and more importance. Now, going back to the slide which I skipped, now what's the problem with our current account? If you look at our current financial reporting, what companies do is they just record what is happening, right? If you ask anyone and say, what's the future of reporting, they'll say, oh, robotics. That's the future of reporting. Robotic process automation, artificial intelligence, blockchain. Now, these are good words to say, and this is definitely the future of accounting. But then these all tools will eventually also tie around with the non-financial information. The problem with our current reporting framework is that we just talk about numbers. We just push numbers in terms of profit and loss, in terms of balance sheet, and we just focus on historic data. We don't tell investors what the future looks like for us. What are the risks which are going to impact us in future? What are the environmental, social governance factors which are going to impact on the performance and growth of my organization in future? And that's a missing part now. We just focus on financial capital as to how much money I got, how I spent, how much profit I made in layman's language, how my business is going. I'm making more money or not. I mean, that's the information you get to know from your financials. I do agree, countries have got their own mechanism on corporate governance where you get more information, but then still that information is not at par with what investors are expecting nowadays. Lack of ESG disclosures, so we don't see a lot of environmental, social, and governance disclosures being included in the annual reports. So there are not massive standards being set till date, so there's a lack of standardization. Though there are standards which are existing, we don't see a kind of standardization happening. There are so many standards and so many frameworks and government regulation, but nothing is comparable, nothing is really, really suitable. And the worst thing I'll tell you that's missing is there's no obligation to audit this information. Auditors are only concerned about financial data, and there's a risk of frauds being happening around these disclosures as well. So that's another area which is really interesting for you to explore in future. So this is a list of 17 sustainable goals. Now what are these? This is what everyone wants to attain, but attaining this is going to be really, really difficult. If at all the finance reporting and investors play their role, that's going to happen, but then it's difficult. But the question should be, why should we as a company come into picture? Why don't government do everything on the climate control and kind of sustainable goals? There's a shortfall, like the kind of funds required for this are massive, and government themselves are struggling with funds now, so it's going to be difficult for them to do it without the support from industry. And these 17 goals, believe me, if at all we achieve this, the world will really be a paradise to live in. It's kind of difficult, but then let's be positive here. No poverty, zero hunger, good health. I won't read it. I mean, I just wanted to include it for your information. But these are all the good parameters which a good economy should attain. Right. Now, going ahead on the shift. Now, this is a very, very amazing graph. I love this graph because the moment I ask someone, are you interested in sustainability? And then the question that comes up is, what is in there for me? My recent interaction, like we recently did a workshop for our CA members, which was organized by one of the bankers here, a regional bank in New Zealand and Australia. One of the directors did a session for us on sustainable finance. And I had members coming to me and saying, why do I need to know about sustainability? I said, it's the future. And if you do this, there's a potential of you getting some assignments in auditing non-financial data or ESG data. There's a potential of preparing reports for the company. And the moment you tie it around the benefit that you reap, you become interesting. And this graph tells you why this is going to be interesting for you. Now, if you look at the wave of innovations, we have seen in previous years, there was a focus on steam power, coal, oil, gas, biotechnology, and nanotechnology is something that is still live, which is still important. But then the sixth wave we are expecting is in renewable energy, which will be driven by sustainability. We'll have things like smart cities. So recently there's one more thing happening, the donut economy for cities. So that's another thing. Circular economy. So a lot of emphasis being given on that. And this is the future. And that's the reason why I'm putting this in front of you. And we recently did a session with some people whom we call as futurists. So they are not the one who gives it that crystal ball and tell you what the future is going to be. They are the ones who have got massive, amazing theories, and they try to predict what's going to be the future. And everyone agrees on this. This is at least the future for the next 20, 30 years. This is something which will have a lot of importance. Right. But what is the shift happening? Now, this is something which I'm talking about futurists and the kind of predictions which are there. But what's happening in accounting and reporting? Now, European Commission recently agreed on the climate benchmark rules. So they came up with the taxonomy, they came up with a set of rules, and the European companies, bigger companies initially to start with, would be reporting information on climate change, also on sustainability as per the required guideline. And imagine the moment regulators say this is compulsory for you, everyone have to do it. There's a new market created for accountants, there's a new market created for consultants. On top of that, there's an opportunity created for this environment and for the world as such. Listing rules in New Zealand and Australia, believe me, a lot of things happening in Australia and New Zealand in this space. So we have the listed companies, it's mandatory for them to report the information on environment, social governance aspect. Bankers are very reluctant now to give funds to the companies which are doing high pollution because the future is uncertain. They feel that if at all there's a revolt, if at all the environment pressure groups come into picture, they might ask if businesses to close down, our loan money is lost forever. And that's the reason why the bankers are interested. So here we have a trend where we're seeing a trend where it's becoming mandatory. In India also it's taking up, so we already had some regulations around reporting, but though we don't have a kind of standard set of guidelines, it's difficult to make it standardized, but then still we see things coming up in this space in India in terms of reporting, and companies while preparing the annual reports would have to give more information. So I'm not an expert on the regulatory aspect of it, but then this is kind of important for you, and that's the reason I'm highlighting it. So moving ahead to reporting framework. Now you'll say, what will I do when I am preparing the reports for my organization? Now this is messy, and I'll tell you why this is messy. Now, if at all you work for an organization which has to prepare financials and the reports as per for the sustainability and non-financial information. Now, how should they prepare the reports? Now the question is, there are different set of standards, different set of frameworks which we talk about. So the first on my list is Task Force on Climate-Related Financial Disclosure. They do wonderful job. So Prince Charles has funded this particular initiative. They've got free e-learning courses. If at all you're interested, please go and look for those courses. They're good. They are amazing. And what they do is they came up with a framework. They said, if at all you're preparing information on climate change, these are the areas which you should be highlighting, which you should be focusing on. Then we also have in UK Climate Disclosure Standard Board, which does a lot of good work, and they have got their own framework on climate disclosure. But the best part is the first two regulators, I'm saying regulators, the standard setter, are working in tandem, they're working together. Then we have a third one. The first two are basically focusing on climate, not holistically on sustainability. But the Integrated Reporting Council, and I majorly work on this area, and this is an area where I have kind of worked before, so I'll talk more on this. So it's an amazing tool. It says, when you talk about your businesses, try and relate how the movement is happening between different capitals. Now, what is meant by capital here? We say we have financial capital, intellectual capital, natural capital, and there is always an interaction happening between them. So if at all I'm manufacturing something, I'm consuming raw material, maybe from natural factors, I've depleted something on that end. Then I'm selling it, I'm getting something on the finance factor. So Integrated Reporting Council have wonderful kind of reporting framework that is called integrate, and the reports prepared as per those standards are called as integrated report. And now we see a trend, many companies are preparing integrated report which ties everything. So they say, this is our objective, to attain our objective, this is what we need to do, because of what we do, these are the impact on different capital, this is the value addition we have done, this is how we have consumed, this is how we have added value to these particular capital. GRI is again on sustainability and sustainable standard. On top of that, we also have sustainability accounting standard board. Now imagine, I come here and say, these are the standards, prepare your report. Your question would be, I'm insane. I mean, how on the earth am I going to prepare my report with so many different standards? I need to stick to one. And that's the whole problem now. But the best part, which we see now, is the International Auditing and Assurance Standard Board is coming with a universal standard on auditing. IFRS Foundation, or the International Accounting Standard Board, ISB, is working on, though it will be a voluntary, not a mandatory thing right now, on some guidelines on how to prepare information, and I guess that's where things will start moving. Also, to give you more insight on this, there's three giants in sustainability reporting: the Integrated Reporting Council, GRI, and SASB, that is Sustainability and Standard Board, are working together on harmonizing their own standards. And if that happens, our problem is solved. We don't need to worry about all these things, but they have kind of slight differences between them, but they differ in the basic definition of materiality, which can have huge implications. Anyway, I won't go into accounting stuff here. But just for your information, to tell you that these are the standards which industries are going to use in future when you start working while preparing their annual reports and while providing information to the investors. I talk a lot about that. And this is a topic which is close to my heart, and that's why I'm watching. I'm keeping a track of time so that I don't force it. Increasing demand for non-financial information. Now, let me bring you back to what is non-financial information. Now, we said P&L, balance sheet, or if you're doing IFRS, you'll call it SOPL, SOFP, whatever name you give to it. You'll say these are general purpose financial statements. It just talk about financial information, profit, loss, money coming in, money going out, kind of stuff. But then investors are saying that's not enough, because when you give me a profit and loss for 2021, you're telling me what happened last year. And as an investor, I don't worry much about what happened in the past. I'm more interested in the future of the organization. And the future now depends on how good you are on environment, social, and governance factors. I've not incorporated one more thing which I should have in my presentation. Apologies for that. But then there are research being done that the companies which are performing good on ESG parameters, that is environment, social, and governance, are generating higher returns for the investors. So, and if you tell everyone that, okay, look at the ESG factor, the company's ESG, just like a human, you say, do the ECG for companies will be looking at ESG, saying that if the ESG is doing good, if the companies are doing good on those parameters, let's buy shares in those companies. Why? Because someone told me they are outperforming the normal performance of any indicator. And that's true. Like, there have been researches done, there's a lot of data to back this particular statement of mine, because I'm not saying it, this is coming from the research is done by the experts in this area. And the companies which are doing good on ESG, they are financially also performing well. And the moment I tell you this, you will say, okay, I don't want to purely focus on financial. I'll also look at your non-financial information. I'll read through your social environment and governance information, because that gives me a clue as to how you'll be performing in the future, and can you even survive in the future, right? So 97% responded. Now the figures coming here are from EY's recent research on how the industry is perceiving this non-financial information. The figures which were there 2 years back were not close to what we have now. Post-pandemic, everyone realized that ESG is important, and investors are now saying, yes, we value this information. So 90% of the investors who were surveyed by the EY say that they look at these structures, they look at the informal structure, while doing the informal structured evaluation, they look at non-financial information. It's a critical factor which they look at. And nearly all respondents said that integrated reports are really useful. They are essential, because that gives you a feel as to how a company works. And then you can say, okay, your company relies on this particular factor, capital, and this is going wrong with pandemic, and that's how it can hit you, and that gives me an insight about the performance of the company in future. So non-financial information is critical, and I always feel that's the future. That's where I'll be working as an accountant, because my role is no longer very much into accounting. I have got barcode scanners. A person sitting on the cash counter does the scanning, sales purchase entry is automatically taken up. My role is there now in guiding how the system should work, in preparing financial information, disclosures, and basically non-financial information. So that there's going to be a huge focus around this. A lot of system shuffling happening at the organizations, and a lot of expertise and consultancy work coming the way maybe your startup, how you do, that's media again. This is going to be one of the most demanding areas in the coming future. And the number of standards you have, you definitely need an expert to tell you which standard or guideline you should be following. Assurance on extended reporting. This is still baby which is yet to be delivered. So we talk about this. The standard is still in pipeline, so it is still in the boom. So we're waiting for the standard to come up. A lot of discussions happening around this. International Auditing and Assurance Standard Board is saying we will give you a standard on how to audit extended external report. So say every time you keep on changing the curve. So what are extended external report? Extended external report says it's inclusive. It's not focusing on financial, but non-financial information as well. So all this ESG information plus financial together is what we label as extended external reports. Now, why audit is mandatory on this? Because user said we rely on non-financial information, but what if that information is unaudited? If it's unaudited, it doesn't make sense for us. The companies might be giving fake data just to create an impression. A very good example of it is what happens with Volkswagen. So the emission scandal which happened at their end, why can't company do that in their financials if they are not audited? So huge trust is being put on the assurance on this area. Believe me, for an auditor, it's going to be difficult because we are exposed to numbers. We generally, I mean, just imagine if you take me to a plant and say, evaluate how much is the emission. I'll be like, I don't know what is CO2, I don't know what is carbon monoxide, how to evaluate. So a lot of systems coming into place, a lot of expertise required in this space. So that this is another area which is open to you to explore if you are looking at do it as a career option or just to enhance your knowledge in this area. But the standard is yet to come. There's a wonderful video on YouTube from IAASDS, pretty small video, I just 2 minutes. If you at all want to go through that, wonderful. It summarizes everything on the extended external reports. That's what's happening in this space. Right. Sustainable finance. Now, this is interesting. What exactly is sustainable finance? So, considering the Paris Agreement, the climate change, and the global temperature needs to be maintained, or we don't want to exceed the global averages pre-industrial level beyond 2 degrees Celsius. What to do? Then the Sustainable Development Goals from UN. What should we do? And the government and the industry said, the governments and the regulators said, let's go back to the industry. And industry said, okay, we'll do that, but then who will tighten the screw? Let's go back to the finances. Tell them that this is in your favor. If your clients to whom you give loans, to where you are investing, if they do well on ESG, you get more returns that ensure the success of the organization. You should look at it. The investors will start doing it. Sometimes it can be a harsh measure. Government will say to the bankers, this percentage of your loan lending should be on green projects. And by doing that, government would try somehow to divert the finances to ensure that the financial allocation, the loan allocation ensures that green projects get priority. And that's what we see is happening around the globe. Now, what's happening in this space? What's sustainable finance? We say sustainable finance is where you are tying back finance with ESG criteria. Now, what is ESG criteria? Now, again, World Bank have got a wonderful initiative there. So what they have done with IFC is they've come up with the regulations which are now not mandatory but voluntary for banks, and many banks are joining that group. And what they do is they say that when you're giving funds, you shouldn't just give funds to any project just looking at the financial performance. Evaluate how that company is performing on environment, social and governance factors as well. So don't just look at the financial part of the project, look at ESG, because the finance numbers might be there for 1 or 2 years, but what if environment, social and governance factor led this business to close down? Your money is gone forever. And that created the need for ESG. Along with that, people realized that the returns generated by companies which are really good on ESG are good, and that created the need and the demand for the sustainable finance. Now, what bankers are doing nowadays is the moment you put a project in front of them and say, this is my project, I'm going to consume a huge amount of petroleum or crude oil, petroleum products or crude oil. They say, oh, put it on back burner. We don't want to give you a loan because you are a risk industry. Right? That's one way of looking at it. Or sometimes they might say, we will give you a loan, but the rate of interest will be higher. But if someone come and say, I'm planning to start a project which will be 100% powered by solar energy, you say, okay, you take loan, or you might say, take a loan at a lower rate, and that's how things are working on sustainable finance. The major sustainable finance product which you'll which you will come across is green bonds. Now, what are green bonds? The bonds actually green? No, not really. So green bonds are where the company raises funds, just like another instrument bond. So I take funds from the public and say, you are giving money to me, you are investing in my company, but this money will be purely used for projects which are green, which are to be in the favor of the environment, where we try to preserve and conserve environment. So that's the green bond. Impact investing is a bit different. So it says we need loan because we want to start a social enterprise, and with this social enterprise, I will generate employment in a backward area. So tribals benefit. I'll promote education in that area. So we see the impact on environment or society. That's impact investing. ESG bond and environment social governance bonds, again related to the performance or to how these projects are tied up with ESG activities and betterment. Active ownerships is where the companies like the venture funds and the capitalists who are venture capitalists who are putting money into your firm, they will try and use their power in a manner that they promote ESG as a part of your organization. Now again, a question came. Okay, fine. You want the financial organizations to ensure ESG is taken care of. Fine, but how? And looking at that, an initiative came up. I'll be moving to the next slide, and then I'll come back. In the form of principles of responsible investment. So some venture funds and investment bankers came together and said we should have some standards. We should agree on some common factors which we will use while evaluating the investments that we do. And that's where PRI came into picture. And all big names here, like Vanguard, BlackRock, are other members of this accord. They have signed this six principles which are there, and they say we will give importance to ESG while putting our funds. And this is a massive news. It has rocked the industry, and this is like last month this came in. So BlackRock punishes 53 companies. So what BlackRock did is they had investment in different companies, and out of that, 53 companies which were not doing good on ESG, they either spoke, they either have spoken against the management openly in the shareholders meeting, or have voted against the disclosures being done, and they are saying we don't agree with you, you're not working on global warming, and that's creating bad impression about this organization. And they also fear what if BlackRock takes the money back or don't lend us in future. So if everyone is now trying to create an impression, that we are serious about it, and they have actually become serious about this by showing and taking actions as well. Earlier it was pretending, now it's more about actual actions. Right. Now, what is ESG? So, environment, social governance. I don't think it makes sense for me to read the slides, but environment is more about the carbon emission, energy efficiency, water scarcity. Social is about diversity, labor standards. You see a lot happening in the social space after the incidents and the revolts happening in the US. So you'll find companies all of a sudden bringing in, uh, I mean, worry about diversity and bringing black people as a part of their board of directors, because they have realized that the diversity is going to be really crucial for them. Governance, we talk about executive compensation, the political contribution, corruption. People are taking it seriously. So if we talk about this, ESG is now becoming the backbone of any successful organization. PRI we covered. So moving ahead on green bonds, I just gave you the insight. But look at this graph. It looks pretty impressive. So if you look at it, 2013, it was $14.8 billion was the market for the global sustainable bonds. But if you look at it now in 2019, we look at the total funds raised in this area, total uh, market for these green bonds or financial instruments which are sustainable is around $465 billion. And just if you compare it with the year 2018, that's a massive increase. It's almost doubling. And believe me, post 2020, you'll find this increasing even further, because pandemic have made everyone realize how important sustainability is. Right. So what are green bonds? I told you this is where company raise money in the bond saying we are going to invest it for green project. Impact finance is where I take money and say I'm going to use this money for a project which is going to impact society at large, or work towards environment conservation. How does it impact me? And this is an important question. You'll say, okay, you spoke so much for around 46 minutes now. What's in there for me? What was the session all about? So the session was about giving you an idea about what's changing, how the industry is going to change, and why you need to prepare for the change. Now, how does it impact you? The moment you start working in accounting or finance department, this is going to impact you. If I'm working as a financial analyst now, I'm no longer looking only at numbers. I need to be an expert at non-financial data as well. So on LinkedIn search, like there are a lot of people who are working on ESG bonds. I personally know people who are massively working in this area, financial analysts, who are gaining expertise in this area because that's impacting their day-to-day working. I'm working as a CFO of a company. I need to ensure that my reports are prepared following the standards and I provide non-financial information. So it's definitely going to impact your day-to-day working to work as an auditor, work as an accountant, work as a reporting expert, work as a CFO, work as an investor, work in a bank, work in a startup. So everywhere, this is going to impact you. Job prospects, we see a massive demand coming for experts in this place. Actually, has started coming in. So we see a lot of prospects in this area. We means industry expert. I'm not the one who tracks the market, but then whoever I interact with is like, yeah, there's going to be a lot of demand for this, and it's bound to be because the standards are coming in. If governments are so serious about it, if governments are making it mandatory, we need people to prepare these reports. That's where the market is existing for me. Business and consultancy potential. I mean, I have been a consultant, and I can tell you it's not about everyone will get into a job. You can always do a switch, coming back to job, moving back to business. So if you're planning your consulting potential, there's massive potential here. If you're planning to start your own startups, there's massive potential again. It's easy to get funds, even your angel funding, Series A, Series B, whatever you call it. It's easy to raise money if you have a green tag attached to your startup business idea. Responsibility as a responsible global citizen, that's the most important thing, right? So as a citizen, as a part of this planet, I need to do something, contribute back. That's the reason I need to work on it. And the most important, my survival, our survival, depends on these factors. Um, and that's the reason why this is critical for me. But the question is, how to prepare for this shit? And this is my last line. I want to keep some time for Q&A. So I need to stay abreast with the development in this space. So my advice to you will be active on LinkedIn, be active, connect with good people. No need to nudge them every now and then and say, oh, how are you doing? Not required. You get to see what they are sharing, what they are posting, what they are working around, and that gives you an insight on what is happening around the world. So don't restrict yourself or only your books. This is my sound advice to you. I mean, when I was a student, we never had an opportunity like this. The social media was there. I mean, I don't belong to the age of dinosaurs, to be honest. But then when I was a student, it wasn't that prevalent. Like we didn't have easy access to internet or easy access to social platform, and we didn't have many people. I'm talking about era where Orkut was. You won't have heard about, right? But then you have this opportunity, connect with good people on LinkedIn. No need to spend a lot of time there. That's on chatting side. So you just need to spend 10, 15, 20 minutes a day, and then you get to know what's happening in the space. Certification or qualification would really help. There are a lot of free certifications and e-learns on this, so you can do something from, if you want to note it down, but I've also shared a link towards the end. So certification from the task force on climate change reporting, they have got three e-learns which are pretty good. You also have something from World Bank SCI, I guess, that they have got a wonderful course on sustainable finance. That sets a stage that gives you an idea so that when I sit for an interview, I know this is bang, this is what I know, these are the certificates which I've done, and the person taking my interview is like, wow, so you are not only aware of sustainable finance, you have done something. Believe me, when you join a job, no one expects you to be an expert, and that happens. So the current role I'm working, I'm new to this. It's just 5 months now, and every day we have new challenges coming in. So you might change job even when you leave an organization, join another, even as a CFO later in your career. That organization will be new, so you'll be learning every now and then. So these certification, this connecting with people is going to help you a lot. Most important thing, nothing can be that is be curious and open to learn. So that's going to contribute a lot. There are a lot of news articles you'll find on this. You'll find a lot of good groups or forums which you can join, and that's where you can learn a lot about this. And last and the most important, connect and with your tribe, people who are interested in this area, maybe in your class itself. You find four, five, six people who are interested in this area, start working around it, start sharing your knowledge, and that's going to be really, really helpful for you. And yeah, that's what I have in the session. I guess I'm on time. And these are the resources. So please visit these websites if you're interested in working in this area. And definitely it's going to be interesting. So these are certain websites which are having wonderful resources on these areas. And whatever I said is not my knowledge. I mean, honestly, I'm not the one who invented this whole concept. So this is all borrowed from different sources, and I'm putting in front of you. But then these are the websites which are really good. You can find good resources on these websites to upgrade yourself. If you go on this website, do serious reading, probably you definitely get more knowledge than what I have on this area right now. And this is me, a professional me, at least this goes on my LinkedIn profile. This is my email ID and LinkedIn profile. Always happy to connect, always happy to answer your questions. I do get questions from students whom I've taught 4, 5, 6, 8, 10 years back on different questions on IU policies, what should I do. Sometimes I'm able to, I mean, able to answer, sometimes I'm not, but at least I connect them with suitable people if I know someone who can help them on their queries, right? So this is my email ID, always happy to connect. And with this, I bring this session to end from my side, but then more than happy to answer your questions. So I'll stop sharing it.
Yeah, we thank you, Sagar, for such insightful session that you had. There are a few students who are asking questions now, and I will be reading out that to you, and you can
Comment.
simultaneously. Okay, so the first question is by a student, Prinal. She's
Yep.
asking, in accounting, we generally ignore qualitative measures, sustainability being a qualitative factor. How will you show in the books of accounts and as an auditor what all parameters you will use to check the sustainability of a company?
Oh,
So,
wonderful question.
talking about qualitative factor sustainability.
Perfect. A wonderful, wonderful question. I mean, honestly, talking about qualitative factors, the sustainability information won't really be a part of your financial statement. It will be more a part of your annual reports as a part of additional information being given to shareholders. So you might have your financial reports followed by a sustainability report where you'll talk more about the emissions. You'll say, and to be honest, you can't quantify these numbers directly, so you'll have to work around on KPIs. So you'll say this much of CO2 was emitted last year, and this is our emission this year. And as an auditor, you might need some expert to check their systems to see whether the data is being correctly captured. So when auditor will certify, we won't be certifying on the information captured in financial statement, but more about whether those KPIs have been met or no. So that will be the focus for auditors. So it won't be directly impacting financials. But going into details of it, it will also impact your financials in another manner. So for example, your impairment of assets. So if environment factors are not complying, then there's a kind of disaster or natural calamity that's going to impact on my assets value. I need to write off those assets. There'll be impairment testing. So those things on financial terms will get in hit, but sustainability in itself will not purely be captured in financial statements.
Sorry to intervene between Professor Soma. Excuse me, Mr. Sagar. Our director, Dr. Adya Sharma, would also like to say some words. So maybe after the, yeah, so if you can, ma'am, could you please go ahead?
Hi Sagar,
Hello, ma'am.
seeing you after a long time, and
Yeah, indeed.
and I'm so sorry I interrupted like this.
No worries, I mean,
I
I'm completely, we
am
have ended the session. Yeah.
and I'm leaving in another 2 minutes, but I couldn't leave without saying a big hello to you and saying thanks to you for coming back and talking to our students. You know how much our students used to enjoy your classes. And I'm also so happy that you're taking a subject which is so relevant today. I mean, especially in the times of today, I don't think sustainability is ever more relevant now when we are talking about people, planet, and profit, all three things. So thank you so much, Sagar. It was such a beautiful lecture, such an interesting lecture. Honestly, I don't want to leave. I also want to ask you 10 questions. But
I'm saying it.
but there are some pending work coming, so as usual, I need to leave. But I sincerely want to thank you for being here and giving such beautiful and wonderful and knowledgeable insights to our students. And I hope we stay connected
Sure.
and keep learning from each other. Thank you
Definitely.
so much, Sagar. And
Yeah.
let me not interrupt. Some of the questions that the students have asked are really, really good, and I felt so much happy.
Thank you,
Thank
ma'am.
you.
Thank you.
Thanks. Okay, so Sagar, moving on to the next question, but before that, is it the business responsibility report you were referring to?
Yeah.
Okay. So the next question is by Jay. He wants to ask, what do you think about recent announcements made by BP to reduce oil production by 40% by 2030 and increase renewable investments by 20-fold in 5 billion a year by 2030? Also, do you think this is because of reduction in prices of crude oil and further predictions by analysts and companies that the oil demand reached its peak in 2019 and will most probably not ever go beyond that? If that's the reason, then will other oil majors and state follow BP in reducing the oil production?
To answer your question, I mean, I'll just come to one point. United Arab Emirates is starting its nuclear plant, and that's the news because a country which has its petroleum as its backbone is thinking about nuclear energy, clean energy has something to say in itself. Look at Saudi Aramco, the biggest company in the world, which was the most valued, but now not. Apple has taken over. But then again, that company is massively investing in solar panels. They're massively diversifying. The Kingdom of Saudi Arabia is diversifying. And as you said, I agree with you. There's a fear that petrol prices are not going to bounce back. I mean, they won't be as bad as they are now. They'll definitely go up. But it's they fear that the price won't be going back to the same level as it was expected. And one more thing is, after pandemic, the governments are spending more on renewable energy, and that's going to impact on the petrol prices. And petroleum companies are definitely therefore worried about it and taking measures to cut on the emissions. But the most important part is the investors. The shareholders are not happy with the emissions which are backed by the petroleum companies. So that's also a pressure on them. But honestly, if you ask me, if you look at some news from BP, what they did is they are selling off the non-profitable assets, but they are still staying in the profitable assets. For example, my extraction cost per barrel is very high in a particular location. I'll say, let me cut this asset out, take money, be happy with whatever I have. I'll focus on profitable one. Two factors achieved. One, I look more sustainable. Two, my emissions or my contribution to the emission goes down. So this is what is happening at BP. But I don't have much of information on this, but I guess I agree with you that petrol price is something which everyone's worried about.
Moving to the next question is by Abhishek. He wants to ask, what factors, according to you, make organizations focusing on ESG impact more successful than the ones not focusing on this?
So honestly, there are multiple factors. So the most important one is the companies which are focusing on ESG, shareholders believe in them because they feel that the governance is better, the directors are someone whom we can rely upon. One. Second, they feel the long-term sustenance is going to be really easy for these companies because even if new laws come in, even if there are stringent measures on the emissions, the company can survive. Thirdly, if the news come that you are treating your laborers in a very bad manner, you're not paying them, you have bonded labor, you have child labor, people might stop buying goods from you. So I guess if you're working around ESG, you're making all the stakeholders happy. Your employees are happy, you're taking care of it. Your customers are happy that they're buying from a ethical company. Governments are happy, so they're ready to cooperate with you. Bankers will give you loan at a lower rate. Your profit shoots up. So that these are the factors that helps a company which is doing good on ESG parameters to also perform well on the financial parameters.
Okay. Moving on to the next question is by Merlin. He wants to ask, or sorry, she wants to ask, what do you think could be the reasons for better performance in terms of ROI of companies adopting ESG factors in their working? Can it be due to the financial perks like special interest rates on loans they are eligible for? Or is it something more than that they are doing?
So I'll connect it with my previous answer. So definitely this is an important thing. So if I'm good on ESG, I borrow at a lower rate. So my finance cost goes down, profit goes up. Wonderful, my ROI is higher. Another thing is I am able to survive in a better manner over a period. Customers are happy with me. I can definitely sell more in the market. Sentiments are better, stakeholders believe in me, government is harassing me less. So all these factors, my legal costs are lower because I'm complying with the law on emissions. And these all factors, yes, they contribute towards high ROI.
Okay. Jay wants to ask another question. He has said also, as more investment firms are taking ESG measures, what effect will it have on financing of coal and oil industries?
They're actually they are bleeding now. If you ask me, things happening in Australia and New Zealand, we are seeing a trend where the companies which are into extraction of coal and into extraction of the natural gas, they are suffering because it's difficult for them to get loans. On top of that, governments are moving to cleaner energy. So Australia, you see, they're still going to gases. So they are moving away from coal and moving to gases. So the ones who are purely into coal sector, they are bleeding. They're bleeding on numbers. The profits are not that great as of now, and they fear for the survival. So they have to diversify.
Okay, so the next question is by Cheryl. Can you talk more on the trigger points which initiated the shift towards ESG in business in the first place? How did need for a focus on ESG manifest itself?
Yeah, so the focus came in because the thing was, just imagine human being. I'm normally going to office. I'm working. I don't care much about myself until and unless I fall ill one day, and doctor tells me if you don't take care of yourself, this is going to get worse, and that's what happened with us. So we weren't that very serious about it. Even some people are still not. But then what happened is, in last few years, we saw the climate change impacting heavily. The environment pattern is changing. The rainfall, the availability of water, scarcity of water, the temperature shooting up, the Arctic ice melting, and all those are the parameters which made governments to think seriously about it. And Maldives, now what's happening with them? People feel that in few years the entire country might vanish, might submerge under ocean. And these are all indicators which are coming in, and the scientific research and the data which is there to substantiate the claim now has been a trigger point, and that's where things started rolling in the favor of ESG.
Last question by a student here is Indresh. He has written, what are the ways in which companies recover money spent on ESG? One more question has come in the
No, no
that
worries.
about recovering the money on
Perfect. That's a very, very valid point. And honestly, see, if you look at it as a businessman, I've been in business. If you're a CFO, you're worried about your money. There's definitely a recovery. So I spend on ESG now, but it gives me a long-term benefit. Just imagine, I put solar panels, pretty costly in gold. Like I have to spend a lot of money now, but long-term, I don't have to spend on the normal energy consumption. So I save money there. Second is the financing. I get loans at a very nominal rate. That's another kind of saving for me. Third is customers value me, shareholders are happy. It's easy for me to float my shares in the market. Uh, Shareholders are happy with my performance, with my information, and all these factors. Even the purchasers, the customers are happy dealing with a company which is ethical. And the compliance costs going down, legal costs going down will eventually definitely give you the benefit. But again, we have to be very strategic when we are doing our ESG expenditure. We shouldn't be overdoing it. So we have to maintain that balance. I agree with you. You cannot blindly spend all your money on social cause without worrying about your long-term success. So there need to be a balance. You need to have some strategic direction to your ESG spending.
So, are you talking about cost benefit analysis?
Kind of, yeah. I won't directly talk about cost benefit because it's definitely beneficial, but then companies can't spend everything on ESG. That's there. So you have to see what is the value added.
So, can we take the last question of the student here? It's Amrit. I'm just
So
reading out the question. Sagar,
yeah.
when we talk about sustainable finance, there is a major problem I see. For
Mhm.
example, when we talk about trees, when we cut the trees, there is an increase in GDP, but when the tree is planted, no increase in GDP is recorded. Also
Mhm.
brings like PM 2.5, which is a problem in recording in financial statement. How is sustainable reporting tackling such problems?
Honestly, sustainability reporting is going beyond that. So what we are saying is recording this information is going to be difficult. So therefore, the shift happening now is the governments are, and even UN came up with a new directive now, which says that you shouldn't purely be worried about your GDP. GDP is again a number, just like financial figure. You should also be given an insight on what is your environmental capital. So you should talk about how much wetlands you have. You should talk about what is the biodiversity in your location. So what is the quality of water that you have in your reservoirs? So it's not purely captured in GDP. I 100% agree with you. So sustainability will be more about non-financial disclosure, non-financial information.
Agar, can I ask one? With your
Yeah,
comment,
yeah, yeah, we have faculty also on board, so they will also like to ask you the question.
and I teach environment management specialization over here in this industry. So,
Yeah.
taking forward Amrut's question, my question to you is this, Sagar. Ecosystem services, when we talk about, that has not been quantified and rather qualitative analysis also, and that especially I am talking about mainly with the South Asia Pacific region, where you
Yeah.
haven't valued that as a commodity.
Yeah.
So when
Yeah.
it comes to the finance of that particular thing, there is a lot of ambiguity. Because, for example, forestry, sacred growth we have been practicing for ages. But what is economic value? We haven't calculated in what terms you are talking about.
Yeah.
So there is a need to quantify that and to add quantitative values to that particular thing. This
Yeah.
is one.
Yeah. So I agree with you. I mean, it's going to be difficult, and that's the reason why what the standards are saying now is you focus more about disclosures, about non-financial information rather than going into quantification. Try and give the qualitative data or use KPIs at least to give a measure. For example, I can say this was my forest cover, and this is a forest cover now. Now, if I'm talking about the economies, now the whole session which we did was more about the companies reporting, but yes, this can also be applied to economies. And if I talk about this, I agree with you. It's really difficult to quantify. Even for companies, it's going to be difficult to quantify, and therefore we say you should use KPIs, proper KPIs, to measure and report this information.
But
And
you're saying that it has to be quantified, then only people take it seriously.
That's there. I mean,
That is
honestly,
the thing
the
because
moment you tell them this is the value of the forest that you have, that's where they realize. Like, until unless you capture that cost, it's really difficult to make people think seriously about it.
okay,
and
one more question has poured in just now. If the general environment in a country is not convivial towards the organizations that focus on ESG parameters and hence do not get any interest on loan benefit, what should those organizations do?
I mean, in that case, it's going to be difficult. I mean, if I'm not getting any benefits, then it's a part of your corporate social responsibility. You should still be doing it, but then I agree there won't be any motivation. And there's another thought process which is going on that there are a group of researchers who are now working on, and they have a very good concept. They say just reporting will not help. The whole mindset of the investors need to change until there's the normal people. As a consumer, if I say, I don't care, I'm getting a cheap product, I don't care who the laborers are, how they are being paid, things are not going to work. So it's more about getting more ethical and giving more importance to these factors. So until and unless people started getting serious about it, definitely it's not going to work to a huge extent.
Anybody else wants to ask any question? It could be Dr. Dheeraj Jain sir, Shreya ma'am.
It seems now, I think there are the questions are not much over here, Professor Soma. So I think it's time for closing
Yeah.
remarks.
So
What
as
I
the
feel is, yeah. So if can I invite Dr. Dheeraj Jain to deliver the closing remarks and vote of thanks for Mr. Sagar?
good afternoon, everybody. On behalf of Ajay ma'am, Master sir, the faculty colleagues, and all the students at SCMS Pune, I thank you, Sagar, very much
Thank
for
you.
in-depth insight into the ESG and its reporting and accountability. And I hope that these future managers and these future business